Great. Thank you. Thank you so much. Yeah, so the title of the presentation, I'll talk about crypto assets, fundamentals and design principles. A very quick brief about myself. My name is Haiyan Alsaiyed. I work with the global system integrator called DXC Technology. We are specialized in building national mission critical payment and financial services systems. I work in leading the innovation practice, specifically serving the financial services. I'm also an author of the first Arabic book on crowdfunding and crowdsourcing. And also I have a couple of articles and white papers talking about how to design crypto assets and use them. The agenda of today's session, actually two parts. The first part is talking about the fundamentals. And in this section, we talk about what we mean by a crypto asset and why they are a new asset class and what role they can play in economy in general, and how we see an emerging new economy called crypto economy and how this is a bit similar to the traditional economy. And then we look at the feature of few crypto assets, and we look them and compare them with other traditional and other crypto assets, so we can gain a clear picture about the fundamentals. And then in the next section, we tackle the design principles and principles, and how we can address these challenges, and we go into further details on and the challenges of how to design them. So the first part, the first one is what we mean by a crypto asset. So crypto asset, there are many definitions on this one, but the most commonly widely used one is the definition used by the Financial Conduct Authority, FCA in UK, which is basically a cryptographically secured digital representation of value. So we take anything of value and we tokenize it, and we use the blockchain technology, the DLT technology, to store and trade and transfer this asset. As we all know, this started in 2009 when the breakthrough of the Bitcoin technology started to inspire the other projects and entrepreneurs and all of that. And as a result of this, we see now we have, as of today, we have around 21,000 crypto assets exist today, and more is emerging every day. So why crypto assets is a new asset class? So we use the word asset class. So let's first understand what assets we have in our life, and why we call them class. Okay, so any set of or any group of assets that have similar characteristics, we call them an asset. So in traditional life, we have assets like currencies, equities, bonds, precious metals, real estate, and money market funds, plus others as well. So each set of them has, they share the same set of characteristics. And it can be classified in many different ways. One of the main classification is to classify them into three types. The first one is called capital assets. These kind of assets, they generate income like stocks, bonds, or real estate. And the second one is the consumable transferable assets. These are the assets that can be consumed and transferred from one type to another. And the third one, what we call store of value assets. This is where the asset cannot be consumed, but they themselves have a value, like currencies and precious metals. Now, in the traditional economy, we we bring commodities like oil, wheat, copper, and all of that, and we spend money on them as a by putting labors and putting resources to manufacture and create out of them goods and services. And we use currencies plus commodities to create products and services, use it in our life, like computer, books, cars, etc. In a similar way, we see an emerging crypto economy where we put the cryptocurrencies along with the crypto commodities, what we call them crypto commodities, to create a new kind of services stemming from the space of the crypto assets. And so, for example, on a platform like Ethereum, we create application using the cryptocurrency Ether and its computing power to generate, to build applications, complex applications like the ones called, for example, basic attention token or AGI and other complex and DeFi applications and lending applications, insurance applications, all of that. So as a result of this, we see a new economy, new crypto asset emerging, a new asset class emerging as this. To understand this further, let's take an example of currency, what we mean by currency. So currency, anything that has a three characteristics, we call them a currency. So these function or three characteristics or three functions. The medium of exchange, so we can use it as in payments, or unit of account. And unit of account plus store of value. So any asset that has these functions, we call them a currency. Now, these functions can work together, complement each other, and one of them may be better than the others. But as of them together, they create a currency. And when these three functions are not working as they intended to do, then we see problems. And we see this throughout the history when the fiat currencies collapse as a result of the inflation and the abuse of the monetary policy. And in these cases, we have seen throughout the history, the currencies lost their functions as a store of value and even as a medium of exchange. So to understand this further, let's put in a table here a list of sample currencies and compare them against the three main functions of any currency: store of value, unit of account, and medium of exchange. So I put here in this list the US dollar and plus the Venezuelan currency. It's called Venezuelan Bolivar, gold, and I put an example, Bitcoin, as a crypto asset. So if you look at them, you see that some of them are good as store of values. For example, the gold. I think we all agree that gold is a very good store of value. However, gold may not be good as a unit of account or a medium of exchange because it's difficult to measure the value of products and services in terms of how many grams they equal or how many kilo they equal in terms of gold. And it's very difficult to use them as a medium of exchange for payments. Unlike other currencies, like, for example, the US dollar, fairly, you can say it's a good store of value compared to other fiat currencies, and then they are widely used as a unit of account and medium of exchange. Cryptocurrency like Bitcoin, of course, there might be some debate about this, but there is an evidence that this crypto asset has been used as a good example of a store of value over the long term, of course, not on the short term because of the variations and speculation in the price. And it also can be used as unit of account and medium of exchange. So the bottom line, this kind of crypto asset can be also used as a currency. Yeah. Now, to understand further this, let's take other good features across many kind of assets. We looked at currencies. Let's see what other features that are good to explore and compare from one asset to another. So we listed here a few other functions and features, how durable is the asset, how portable can it be easily as a function, whether it is fungible or non-fungible, verifiable. Can we verify the ownership of the asset? Censorship resistance. Can this asset, when it is transferred, can be intercepted? Can this be prevented or not? This is what we call censorship resistant. Is the currency, or sorry, is the asset is divisible or not, scarce or not, established or not? So I put here in a list of good, and the final one, P2P. Can this be transferred in a peer-to-peer way? I put a list of all these features, and I want all of us to think how we can compare the following crypto assets on the left side against all these features. So on the left side, we have Bitcoin, we have gold, and we have stable coins. I hope the audience are aware of what stable coins are. So they are fiat currencies tokenized on the blockchain network. So stable coin, one USDC or one USDT equal $1, one DAI equal $1. And also fiat. I put three types of fiat currencies: the cash, the bank deposit, and central bank digital currency. So, and if we compare all of them together against all these features, we see here, let's say, a new view that could help us understand, further this emerging economy and how this can be very helpful to understand how we can benefit from them and how we can best design them in the coming second part. So in this list, I used three different colors. The green is the good one. Yellow is medium, average, and the red is the bad one. So as you see, some assets are really bad in terms of how durable, how portable they are, how scarce they are, how well established they are. But there are really very good ones. The green highlighted ones are really good in their features. So one asset, let's take an example. Compare the fiat currency, the cash. So the cash is not good as durable, so it can be destroyed easily. So it's not easy. It's not that much durable. Portable, moving cash from one place to another, it's not an easy thing. So it's not good compared to Bitcoin or other electronic stable coins like and deposit and others. Yes, it is fungible. So one piece of fiat currency cash equal another one. How verifiable is what I own in terms of cash? That's not an easy. Censorship resistant, yes. When you move, when you transfer cash, it's resilient against censorship resistance, unlike the other assets, and it is not divisible easily, and it's not scarce. This is one of the big problems of fiat currency because of the inflation and the other things related to inflation. It's not scarce. Always central banks, they print money and they use inflation as one of the tools in their monetary policy to control the economy and use it for other things related to the economy. So it's not well established on the long term. But it can be easily transferred in a peer-to-peer way. Of course, we don't want to spend too much time on comparing each one of these assets, but I put this as a table to shed the light on the fact that one asset might be very good in some areas, other assets are good in other areas, and so on. And I put in the right side the central bank digital currency. This is the new kind of digital asset that now everyone is talking about, and how this might be in the future widely used in the new financial services that central banks are trying to build in the future. So as you see, they are good as a tool to, good as an asset to be transferred in a peer-to-peer way, unlike the other fiat, like the other electronic and fiat currencies, but they inherit the features of the fiat currency. So they are not good, they are not scarce, and they are subject to censorship-resistant issues and the other issues of fiat currency. Okay, so so by this slide, I finished the first part, talking about the fundamentals and the features important that we need to consider when we design any crypto asset. Now, in the second part, we'll talk about, okay, fine, now we understand now what crypto asset is all about. We understand this is a new asset class. We understand this is playing a role in the emerging economy, and there are really very good crypto assets in terms of few features that are really transformative. So okay, how we can design them? Okay, that's the purpose of the second part. So in this part we'll talk about first the tokenization. What we mean by tokenization. So we have something called crypto asset because of what we call tokenization. Tokenization is the process of creating tokens representing the value of the other assets that exist in the physical world. So in this process we can tokenize real estate asset, precious metals, documents, money, all of that. When we tokenize it and put it on the blockchain, then we can inherit all the good feature of the blockchain, which means we have then programmable asset that is available publicly 24/7, can be transferred in a peer-to-peer way without any middleman. So the clearing and settlement can be in real time, it can be consumed by human, by machines, all of that. All these good features can be then available for us when we do this, when we tokenize the asset on the blockchain. Now, of course, the issuance of the tokens is subject to a process called token issuance, and there are a few types of this called ICO, initial coin offering, or initial exchange offering, or STO, security token offering, and we can talk about them briefly later. So why we do tokenization? Mainly because it's easier to issue assets and less costly when we issue assets on the blockchain, unlike the other assets. And it's an opportunity to increase the liquidity, because when we put the asset on the blockchain, then we can easily list that on the decentralized exchange and other crypto exchange. So we can then easily trade it, and also we can codify rules and regulations, because it's a programmable asset. Using smart contract, we can put complex logic to facilitate very interesting, innovative use cases. And finally, of course, it increased transparency. All the transactions related to the asset are posted on the blockchain. We need to differentiate, of course, between two types of asset tokens. One, we call them native tokens. These are natively represented on the blockchain, like Bitcoin or Ethereum themselves. And we have non-native tokens representing asset of the chain. So they represent a value that exists outside the blockchain. We call them off the chain, like cash, real estate, securities, and so on. Now these crypto assets, from a regulatory perspective, they can be classified. We need when we design crypto assets, we need to understand the regulatory framework classifying them. So regulators classify them in three categories: the exchange token, those that are used for mainly for as a medium of exchange or a direct investment. The second one is a security token, and these are mainly used to raise capital and investment as well. The third one, we call it utility tokens, that these tokens are used to give the owner of them the right to consume a service or a service from the platform itself. We call them utility token. Now, it's good to mention that sometimes we call them crypto assets, sometimes we call them virtual assets, some others, regulators, they call them virtual asset, but they are all, talk about the same thing. But we see that crypto and digital assets are the most commonly used one, that we see a growth in using this. Now, okay, that's when we design them. Okay, so now we understand, we have some sort of understanding about the fundamentals of crypto assets and what we mean by asset tokenization and why we do, why we tokenize them, what benefits we can get out of them. Now, how to design them. And this one is one of the most important slides here. So when we design a crypto asset, we need to look at three different areas. One, we call them the business challenges. And in this area, we need to look at what use cases can be served using this new crypto asset. So for example, if I'm going to use that, if I'm going to design a central bank digital currency, I need to look at, is this going to be used for wholesale or retail, and what are the sub use cases underneath of each one. And we need to understand the tokenomics, and this is a term used to describe, okay, how many of them I will issue, how are we going to circulate them, what assets are backing them, and how many owners will be using them, and so on and so forth. And if there are any vesting terms are applied against them, and so on. And also under this business challenge, we look at also how I'm going to circulate and distribute this asset, and how I'm going to provide it for training, and what kind of risk and mitigation I need to consider when I design this. And the second challenge is the legal. So, when I introduce a new crypto asset to the economy or the market, there are legal implications I need to consider. So if they represent if they have a monetary value, then this is going to be used in the financial services. Then there are certain regulations applied on this. For example, the anti-money laundering, counter financial terrorism. All of these regulations apply on the asset, and there might be some specific jurisdictions regulations that need to be applied, depends from one country to another, and there might be some dispute resolutions and legal agreements that need to be put in place in case of issues that could emerge as a result of distributing or losing or disagreeing on the value of these assets, plus the roles and responsibility of the main actors trading or using or consuming these assets. The final challenge are the technical ones. So what are the design architecture? Are there any standards, patterns that need to be followed? The security of the assets, the technology platforms that I will use it to do it, and plus the traditional challenges of implementing and operating any technical solutions. And we will look at a few of these areas in the coming slides. One of the principles that is important to understand is that any crypto asset, it has a life cycle. And usually this cycle is done through the following steps. So the issuance, or we call it minting or issuance, And then once this is issued, the crypto asset, it needs to be distributed, transferred to the owners. And now the owners themselves, they later will transfer it and exchange it with others. They may use it for payment, they may use it to transfer ownership to others. And finally, there should be a way to redeem or destroy this token to take it out of circulation when there is no need for the crypto asset and there is no need, no further function is coming out of it. And some of these steps might be merged together or might be separate. So, but when I design the crypto asset, I need to look of this cycle in general. And now when I trade, when I trade the crypto asset, it's worth to mention that the beauty of crypto asset is that all the clearing and settlement is done in the real time, unlike the other way in the traditional asset. In the traditional asset, trading assets is quite complex. There are intermediary organizations which play a role in the clearing and settlement, but in the crypto economy world, clearing and settlement can be done in real time, and this is where the value of the crypto asset come in play. Now, yeah, so we talked about the beauty of trading of crypto asset. Now, as we mentioned in the technical challenges, there might be some design patterns or technical standards that are really useful to design the crypto assets. And these standards design patterns are really important because they facilitate what we call interoperability in the crypto space, and as we all know in the DeFi. So, for example, on the Ethereum network, there are widely used standards to design token. The most commonly one, it's called ERC20. Widely used. The majority of crypto assets are from this type. There are other types for non-fungible tokens like ERC721 that is commonly used in games. And there are other ones used for security tokens to represent shares in companies and stock and all of that. And these are extremely important to adopt when we design a crypto asset instead of building it from scratch, because these standards they have been tested and they are very secure and they are not vulnerable to security issues, unlike any new thing created from scratch. And as a result of this good standardization, we see the world, the DeFi world is working now. If you look at the DeFi stack, we see that there are many layers that they work together, but they all, the beauty of that, all these layers work together as a result of the interoperability standardization that has been established as a result of these ERC standards. So the protocol layers I mean, the exchange, lending, derivative, asset management, all of them, they can easily work with any ERC20 token and stuff like that. Finally, the last slide. I want to bring into example what are the design patterns of central bank digital currency. So there are three types of let's say design patterns. One, it's called the direct, where the central bank itself issue the central bank digital currency and distribute it directly to the citizen and to the consumer and merchants. Now, this has some challenges. This means that the central bank has to keep a ledger and deal with all KYC and onboarding of consumers and merchants. Another pattern, it's called the indirect, which is a bit similar to the existing financial services infrastructure, where the central bank digital currency as an asset it's issued in the central bank, then get distributed to the banks as an intermediary, and then these intermediary banks distribute them to the consumer and merchants. This is a bit similar to the existing model of how financial services work. So this will not cause any big change to the existing financial services. The last one, it's called the hybrid model. It's a multi-tier architecture where the central bank issue the currency to not only intermediaries, banks, but also other payment service providers. They can also process payments. And then this get distributed to consumer and merchants, even those that are unbanked. So, so I hope in this presentation I have given you, let's say, I hope I have given you the, let's say, the starting keys to look at how to think and how, when you design a crypto asset, what kind of challenges you need to think about, and what kind of standards you need to adopt, and what are the you know, the key steps that you need to go through in order to get this journey done. So I hope we get your feedback, and we look forward to receiving any question.